All right, let's dive into Warren Buffett's latest letter to Berkshire Hathaway shareholders. This thing's always a gold mine.
Yeah, it's not just about the numbers, is it? It's like a window into how he sees the world, like the American economy and business and everything.
It really is, and this year, he doesn't hold back at all.
No, not at all.
We've got a record-breaking tax payment, an incredible story about a guy who sold his business to Buffett for a salary of $100,000 a year.
Oh, Pete Legel. I love that story.
What? You've heard it already.
Oh, yeah. This letter's amazing.
Okay, well, let's start then with Buffett opening up about some of his mistakes, all right?
Yeah.
He's pretty candid about how he misjudged some things.
Yeah.
What do you think about that, him just being so upfront?
Well, it's unusual for a CEO, right? You don't really see that
No,
much.
definitely not.
I mean, especially in like these huge companies, everyone always tries to look good all the time. But Buffett, he just lays it all out there, admitting he got things wrong, like about the economy, about some managers he picked. And then what I really liked was how he focused on learning from those mistakes.
Yeah.
Like not dwelling on it, but actually taking action, fixing things as soon as possible.
Yeah, I think that's a key part of his success, wouldn't you say? Like always adapting, learning, changing course when you need to.
Absolutely. He doesn't get stuck in the past. I mean, think about it, in investing, you need to be able to recognize when you're wrong, change your mind, and move on. And he does that.
Yeah. And he actually mentions this advice he got from Tom Murphy like 60 years ago.
Oh, yeah, the praise by name, criticize by category.
Right. It's simple, but so effective. And speaking of praise, I mean, Buffett really goes all out when he talks about this Pete Legel guy, the one who sold him Forest River back in 2005.
Oh, Pete Legel, he's a legend.
So remind me, how did that whole deal go down again?
So legally, he builds this company, Forest River, right?
Yeah.
And it's doing really well.
Right.
And Buffett wants to buy it. But here's the thing. Legel doesn't want like a huge payout or anything. No. He's already pretty well off. All he asks for is a salary of $100,000 a year. Can you believe that?
$100,000 to run a company he just sold for, what was it?
Millions. I don't remember the exact number, but it was a lot.
Yeah. So what happened? Did he stick around?
Oh, yeah. For like 19 years. He ran the company better than anyone, blew past all the competition.
Wow. That's pretty impressive.
Yeah. I mean, that's exactly what Buffett looks for, right? Not just a good business, but a great manager to run it.
Right. That seems to be a recurring theme with him, finding the right people for the job.
Yeah.
Like he trusts them to do what they do best.
Exactly.
And speaking of jobs well done, let's talk about how Berkshire Hathaway did overall in 2024.
Okay.
What are some of the highlights from the letter?
Well, overall, it was another good year for Berkshire, even though some of the subsidiaries had a bit of a dip in earnings.
Really? So what kept things afloat, so to speak?
Well, the investment income went up a lot, which helped, and the insurance business was really strong.
Oh, right. They own a ton of insurance companies, don't they?
Yeah, Geico's a big one. It had a huge turnaround this year under Todd Combs. He's doing a great job.
I was going to ask about Geico. Remember Buffett talked about climate change impacting insurance, especially with the rising cost of, like, storm damage.
Oh, absolutely. It's definitely a concern.
So do you think they're doing anything to kind of mitigate those risks?
Oh, yeah, for sure. Buff is very aware of it. He actually mentioned how convective storm damage is going up.
Right. That's tornadoes, hailstorms, that kind of thing, right?
Exactly. So Berkshire's adjusting how they assess risk,
Yeah.
to make sure they're pricing policies correctly.
Makes sense. They have to adapt.
Yeah.
Okay, so let's talk about that elephant in the room. The massive tax payment.
Oh, yeah.
Berkshire Hathaway paid how much? $26.8 billion.
It's insane, right?
It's got to be some kind of record.
It is. It's the biggest corporate tax payment in U.S. history.
Wow. So how did they end up owing that much? Is it just because they're so successful?
Well, yeah, that's part of it. But it's also because of how they reinvest their profits.
Right. They don't really do dividends, do they?
Nope. For like 6 decades, they've been plowing those profits back into the business, buying up more companies, growing the ones they have.
So it's all that compounded growth over the years that led to this huge tax bill.
Exactly. It's really a testament to their long-term approach. They're not focused on short-term gains. They're building something that lasts.
That's pretty remarkable when you think about it. Okay, so let's dig into how Berkshire actually invests its money. Buffett talks about 2 main approaches in his letter, right?
Right.
Controlling stakes in, like, wholly owned subsidiaries and then minority positions in these big publicly traded companies.
Yeah.
What are the pros and cons of each, would you say?
Well, with marketable equities like stocks, He's got more flexibility, you know?
Right.
He can buy and sell easily if the market changes. But with subsidiaries, it's different. It's
Yeah.
more hands-on, they have more control, but it also ties up more capital.
Right. More risk, more reward, I guess.
Yeah.
But even with those two approaches, Buffett seems to be sticking with his belief in equities, specifically American companies.
Oh, yeah, that's his bread and butter. He sees it as the best way to deploy capital over the long term.
But why is that? I mean, shouldn't he be a little more diversified?
Well, he thinks that over time, American businesses will continue to grow and innovate.
Right.
He's not really into cash or fixed income investments right now.
Why not?
He's worried about monetary instability, thinks they could lose value.
Interesting. So he's betting on American ingenuity
Yeah.
to, like, outperform any potential economic turmoil.
Basically, yeah. He's got a lot of faith in the system.
All right. Well, speaking of betting, let's talk about this move into Japan that Buffett's making. He's investing more and more in these 5 Japanese trading companies.
Yeah, it's a pretty bold move, right?
It is. What are those companies again?
So we've got Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo.
Okay. And what do they do exactly?
They're kind of like mini Berkshires in a way. They have their fingers in all sorts of businesses, from energy to food to textiles, you name it.
So Buffett sees them as like kindred spirits, these Japanese companies.
Yeah, in a way, he's really impressed with how they manage their capital, their long-term outlook, and their commitment to shareholders.
It's interesting that he finds these similarities across cultures.
Right. And here's another thing. He actually borrowed money in yen to invest in them.
Why would he do that?
Well, it's a way to minimize the impact of currency fluctuations. He wants to be currency neutral, as he calls it.
Currency neutral, meaning
Meaning he wants the profits from his Japanese investments to offset the cost of borrowing in yen, regardless of what happens to the exchange rate.
so it's like a hedge against currency risk. Smart move. But are there any specific risks with investing in Japan right now?
Well, every investment has risks, of course. But Buffett's done his homework. He's been watching the Japanese market for years,
Yeah.
and he seems pretty confident in the companies he's chosen.
Okay, well, before we move on, Buffett gives us a little peek into the upcoming Berkshire Hathaway shareholder meeting in Omaha.
Oh, yeah, it's coming up fast. May 3rd.
And what's on the agenda this year? Anything exciting?
Well, all the usual stuff, Berkshire products, the Q&A with Buffett and the team.
Right.
Oh, and Becky Quick's going to be there asking questions.
Oh, cool.
Yeah.
And they're releasing that new book, right? 60 Years of Berkshire Hathaway.
Yep. It's going to be a big one. They've been working on it for years, packed with all sorts of insights and stories.
It should be interesting to see what they reveal in there. And I love that anecdote Buffett shared about his sister Bertie.
Oh, the one about the cane.
Yeah. She uses it to ward off unwanted attention.
Sounds like her.
I'll have to keep an eye out for her at the meeting. Okay, so I think we've covered a lot of ground here in part 1 of our deep dives into Buffett's letter. We've talked about his mistakes, his investment philosophy, his big tax bill, his move into Japan, and even a little bit about the upcoming shareholder meeting.
It's amazing how much he packs into these letters. It's like a masterclass in business and investing.
It really is. And there's still so much more to unpack. In part 2, we'll delve deeper into Buffett's views on the insurance industry, his perspective on the U.S. economy, and some of his thoughts on the future of investing. So stay tuned for that.
Yeah, you won't want to miss it. Okay, so picking up where we left off, I think it's really interesting how Buffett talks about the insurance business model, especially property casualty insurance. It's so different from other industries.
Yeah.
How so? Well, think about it. With most businesses, they know their costs up front, right? Like labor, materials, inventory, all that stuff. They sell a product or service, and then they can figure out their profit. But with property casualty insurance, it's kind of flipped.
What do you mean?
Well, they get the money first, the premium payments from policyholders, but they don't always know how much those claims are going to cost them, sometimes for years, even decades later.
That's wild. So they're kind of operating in the dark a bit, huh?
In a way, yeah. But it also gives them this huge pool of money they can invest while they wait to pay out claims. It's called float.
Float. Okay, break that down for me.
So imagine you pay your car insurance premium today, right? But you don't get into an accident for, say, 5 years.
Right.
For those 5 years, the insurance company has your money, and they can invest it and earn a return on it. That's the float.
So it's like free money for them to play with, basically.
Well, not exactly free. There's always the risk that those claims will come in higher than expected.
Right, of course. That's the gamble. Right.
Exactly. Buffett talks about how an insurance manager can actually be losing money for a long time without even realizing it. That's why Berkshire focuses so much on understanding those potential surprises and making sure they're financially strong enough to handle them.
It's like they're building a fortress to withstand any storm, financially speaking.
Exactly. And remember, they don't rely on reinsurers, which gives them more control and saves them money in the long run.
Right, they're playing the long game. And Buffett really sings the praises of Ajit Jain, the guy who runs their insurance operations.
Oh yeah, Ajit's a legend.
He calls him a genius, like a master of understanding and pricing risk.
He's been with Berkshire for a long time, and he's built their insurance business into this massive global powerhouse.
Yeah, he's a key part of their success, that's for sure. And Buffett even points out that both he and Greg Gable have a significant chunk of their own personal wealth tied up in Berkshire, right alongside the other directors.
Yeah, they're all in, basically.
It's good to know their interests are aligned with ours.
For sure. But, Buffett doesn't shy away from the challenges facing the insurance industry either. Like, natural disasters are becoming more frequent and costly.
Right, I was going to ask about that. Climate change is a big factor, isn't it?
Yeah.
Hurricanes, wildfires, tornadoes, all getting more intense.
Absolutely. It's a huge concern for insurers.
So how's Berkshire dealing with that?
Well, Buffett acknowledges that it's a real problem that they can't ignore. They're adjusting their models to account for the increased risk of these events.
So they're being proactive, not just sitting back and waiting for the next disaster to strike.
Exactly. It's all about adapting,
Yeah.
pricing those policies appropriately, making sure they have enough reserves to cover the potential losses.
Makes sense. It's a risky business, but someone's got to do it. And when it comes to risk, Buffett has a pretty clear philosophy, right? He says, we will never follow a policy of writing insurance at inadequate prices simply to remain in the game. That strategy is corporate suicide.
He's not messing around. He'd rather walk away from a bad deal than risk the whole enterprise.
It's that discipline that's made him so successful. Okay, so let's shift gears a bit and talk about this move into Japan that Buffett's making. What do you think's driving that?
Well, it seems like he sees a lot of opportunity there. He's bought stakes in 5 of these Japanese trading companies.
Right, remind me, what are those companies called again?
Okay, so there's Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo.
Got it. And what do these companies do exactly?
They're pretty diversified, actually, kind of like mini Berkshires, as I said before. They're involved in everything from energy and commodities to food and retail.
Interesting. So Buffett sees some parallels with his own company.
Yeah, he's really impressed with their management, their long-term focus, their commitment to shareholder value. They tick a lot of the boxes for him.
It's kind of cool that he's finding these like-minded companies in a totally different culture.
Yeah, it shows how his investment principles can transcend borders. But what's really fascinating is how he's financing these investments. He's borrowing money in yen to do it.
Wait, why would he do that? Doesn't that add more risk?
Well, it's a strategy to minimize the impact of currency fluctuations. He wants to be currency neutral, remember?
Right, so that means...
It means that the profits he makes in yen from his Japanese investments should offset the cost of borrowing in yen, regardless of how the exchange rate moves.
So it's a way of hedging his bets, essentially. Clever. But are there any specific risks associated with investing in Japan right now?
Well, there are always risks, right? The Japanese economy has its own set of challenges, but Buffett's clearly done his homework, he's been watching the market closely, and he's chosen companies with strong track records.
Right. He's not one to just jump into things blindly. So it sounds like he's pretty confident in this move.
He seems to be, and it's interesting to see him diversifying geographically, especially given his long-standing focus on American companies.
Yeah, I guess it shows that he's always looking for opportunities, wherever they may be. Okay, well, before we wrap up this part, let's tease what we'll be covering in the next and final segment of our deep dive into Buffett's letter.
Sounds good.
We'll be diving into Buffett's views on the U.S. economy, his thoughts on the future of investing, and maybe even some reflections on his own legacy.
Yeah, it's going to be a good one. Stay tuned. All right, so as we wrap up our deep dive into Buffett's letter, I think it's important to highlight his perspective on the U.S. economy.
Yeah, even with these investments in Japan, he's still a big believer in American businesses.
No, absolutely. He talks about how the U.S. has this incredible ability to create wealth and prosperity, even with all its, flaws and challenges.
Right.
And he really attributes that to the capitalist system. It's not perfect, he admits that, but it's been a powerful engine for progress.
Yeah, he acknowledges that there can be downsides, abuses even, but he still sees it as a driving force behind innovation and economic growth.
Exactly. And he points to the U.S. as the prime example, going from a colony to a global superpower in just a couple of centuries.
It's a pretty remarkable story when you think about it.
It is. And Buffett emphasizes the importance of saving and investing, how that's been crucial to the country's success.
Right, like people putting their money to work, whether it's buying stocks, starting businesses, funding new ideas.
Exactly. And that's where Berkshire Hathaway's philosophy comes in, right? Reinvesting those profits instead of paying dividends.
Yeah, that long-term approach has really paid off for them.
Oh, for sure. It's
Right.
allowed them to grow exponentially and create this massive amount of value for shareholders.
And it's not just about Berkshire's success, right? It's about the impact they have on the broader economy.
Right. Their investments and operations support tons of jobs across all sorts of industries.
It's a great example of how patient, disciplined, long-term investing can benefit not just the company, but society as a whole.
Absolutely. And speaking of long-term thinking, we have to talk about that record-breaking tax payment again.
Right. The biggest corporate tax payment in U.S. history.
It's a huge number, and Buffett sees it as a sign of Berkshire's commitment to the country, their belief in the future of the American economy.
It's a pretty powerful statement. I mean, they're putting their money where their mouth is, so to speak.
Exactly. And it really highlights the importance of corporate responsibility, businesses doing their part to support the system that allows them to thrive.
Okay, so before we wrap up, I have to mention Buffett's invitation to the annual Berkshire Hathaway shareholder meeting in Omaha.
Oh, yeah, that's going to be a big one.
It always is. It's like a pilgrimage for investors from all over the world.
It's a chance to hear Buffett speak, ask questions, connect with other investors. And this year, Greg Abel's going to be up there on stage with him during the Q&A.
Yeah, that's a big deal. It shows how he's really being groomed to take over someday.
Absolutely. And of course, we can't forget about the new book, 60 Years of Berkshire Hathaway. I can't wait to read that.
Yeah, it's going to be packed with insights and stories from Buffett's incredible journey.
I'm sure it'll be a bestseller.
Well, I think that about covers it for our deep dive into Warren Buffett's latest letter.
Yeah, we've gone through a lot. His thoughts on the economy, the insurance business, his investment philosophy, that massive tax payment.
It's amazing how much he covers in these letters. It's like a window into his brilliant mind.
It really is.
So, to our listeners, we encourage you to seek out the full shareholder letter and read it for yourselves. You won't be disappointed.
And as always, thanks for joining us on the deep dive.